Good morning. It's Mary Ellen McGonagle with the MEM Edge Show. This is the show where we put you in front of where the action is in the broader markets, and then we drill down into individual stocks. Certainly today, the action is not so bullish here, but we can certainly dig in. There's a lot we can cover. Let's go ahead and take a look at today's agenda. The first thing, of course, we're going to go ahead and take a look at the broader markets, review where we are, what we are on the prowl for as far as turning positive on this market. And of course, all of this is with an eye toward helping you develop a game plan. And again, not just for today, this is going to be getting your game plan going, certainly at least for next week and beyond. So that's where we're going to go ahead and get started. From there, we're going to talk about playing defense in a fragile market, and we'll review some ways that you can counterbalance this downtrend that seems to be grasping pretty much all areas of the market. So we'll go ahead and look at some options there for you so you can potentially protect your portfolio if you're still in these markets. And then uncovering weakness and selling into rallies. For those of you that may have held on to some of your positions and you're thinking you want to lighten up, we'll go ahead and review ways that you can do that, primarily by uncovering really where the real weakness is and giving you a sense of where you might be better served if you were to lighten up your holdings in that given area. And then how to play volatility. We will take a look. Certainly even today, the markets really have been only open for a bit of time, and we've seen quite a bit in the way of volatility. The market's opening down, buyers coming in. So we'll go ahead and take a look at that as far as ways that you could potentially play this volatility. So here we are. This is the S&P 500 large cap index. We're looking at a weekly marked up chart. This is as of the close on Friday, but it's certainly going to give us a very good standing or feel for where we are. So what I've done here is each week on this chart is representing, each bar on the chart is representing 1 week of trading activity. So I've gone ahead and overlaid some simple moving averages. On the top here, we have what's called the RSI, the relative strength. And then down below, another momentum indicator, stochastics. And we'll review where each of these indicators are now and their significance. So go ahead and start with the simple moving average. This red line is your 50-day simple moving average. Quite simply, it's the smoothed out version of your last 50 days of trading. The blue line is your 200-day simple moving average. And these are the most widely simple moving averages that are used when you are analyzing the broader market indices. And the first thing, of course, is you want these indexes to retain a presence above certainly the 50-day simple moving average. And ideally, you'd like these simple moving averages to be trending upward. So let's take a look at where we are now relative to these moving averages. We can see back here, this is the October break, and the indexes broke below the 50. Now they're below that 200-day simple moving average. Really quite a heavy pattern. We can go back to the 2016 market correction and in the November fall period leading into it. So I'm pointing you back to here so we can get a feel for what you would like or need to see in order to turn bullish on these broader markets. And so certainly the first identification here is going to be a break back above these simple moving averages as a bullish signal. But then we can take a look at these overlays in addition to providing insight. This is the stochastics, and we want to see these stochastics trending upward. As they cross above this dashed net neutral, that's going to be bullish. When you can line that up with the indexes breaking back above these key simple moving averages, you are back in a bullish stance. And certainly on a weekly, it's going to be more powerful. You will see this occur on the daily chart a bit more frequently, but when it does occur on the weekly, it's typically is a very, very significant and positive occurrence. And this is the pre-election pullback and the downtrend reversal out of that. And then, of course, in line, this RSI, we want to see the RSI line trending upward and breaking back above that net neutral. So here we are currently, the stochastics are down and out, so to speak. I'm pointing out that they're approaching an oversold position because that is with an eye that you very well may see a bounce, and that is what we did see back here as the downtrend did reverse. So the stochastics are certainly at this juncture not heading quite in the right direction. This is the correction reversal back in from the February correction, and we can see that. So again, we are down here. We ideally want to see this stochastic turn back up in line with an upward trending market that breaks back above these simple moving averages and the RSI to trend upward. So quite clearly, we are in a difficult period, to say the least. We are in a downtrend. So with that in mind, those that are active investors, you are generally going to want to keep a defensive stance, but let's go ahead and using StockCharts.com, get a really good sense of where we are relative to the markets, the peers. What we can do is look at the candle glance, and I've gone ahead and populated this with various market indices, the NASDAQ, the Dow, Russell 2000, and then some ETFs that are going to be really helpful as far as signaling where you could potentially get defensive and put money to work, or where the real weakness is, so that if you do have positions in that area, you will want to lighten up on any rally attempts given the current weakness in the broader market. So down here at the bottom of this candle glance that you can get from the StockCharts.com initial interface page, here's where you're going to go ahead and populate. So I have XLK is technology, XLV is healthcare, XLP is consumer staples, financials, we have real estate, gold, and the utilities. So we do have some defensive sectors in there, as well as the growthier technology. So what I've done here, this is a 2-month thumbnail. You can overlay an indicator. I put the RSI. I want to see relative strength. And what you can do from here is go ahead and sort that by descending. So we're going to get a sense of strength to weakness on the left side here. I'm refreshing this as the market continues to advance to get a feel for where we may be seeing some strength. So we can see again, by sorting it by the RSI, the relative strength indicator, again, it's going to populate this with the stronger groupings and sectors up on the upper left quartile, drilling down to the lower right, and this is your weakest area. So taking a quick view here, we can see that gold stocks are having a bit of a rally. We are going to go ahead and dig into that area and give a backdrop as to why some of these gold stocks are rallying and how you might take advantage of that. Volatility, it's up again today, up 8%. We're almost at 24. Anywhere from that 18 to 20 is when the red flag does start to get raised. So we are seeing a pickup here in that volatility, and that is also known as the fear index. So we can see that fear is picking up again. Utilities. Now, these utility stocks have been doing well. They're dropping about 1% today, but these stocks generally have higher yields, and they are oftentimes used as a proxy for bonds. They can be a wonderful safe haven. We are going to dig into that area. And then also real estate. Now, the real estate sector does have, in addition to these real estate investment trusts that offer yields, there's also real estate development, and that's been lagging and pushing this real estate index down. We will get into that a bit, but let's go ahead and take a look at some of these weaker areas down here in the lower quartile, and it is with an eye toward, at some point, a potential bounce. This is the financial index, XLF. You can see how damaged financials have been, and they are entering into bearish territory, down 20% from their peak in price, down another 0.25% today. Small cap stocks also struggling. This is the Russell 2000 index, and this is indicative of a risk off market environment. Small cap stocks do tend to be riskier in the sense that they are more volatile. And then we can see the S&P is struggling as well. So let's go ahead and take this information with us as we drill down further using StockCharts.com. So I'm going to take you to this initial page on StockCharts, and what we can go ahead and do from here is take a look. We talked about gold stocks being in a bit of a rally mode. So what I'm going to do here as a way of getting you into that industry grouping and potential candidates, we can access it one of two ways. I think what I'll do today is go ahead into the industry summary. This is a summary of each of the sub-industry groupings within the various sectors, and it's all going to provide you with the bars over here are the performance for today. So I'm going to go ahead down to the materials sector, and then from there, we can take a look at some of these gold stocks, the miners. Actually, we can drill right into the gold mining stocks by clicking onto the name of that sub-industry grouping. And from here, it's going to go ahead and sort this list by performance today. And this is probably startling to see relative to what's going on in the broader markets. But what we can do from here is sort this list. You can overlay your cursor and it will provide you with a thumbnail shot of these various stocks that are in the gold mining space. So some of these initial stocks that are rallying the strongest today do appear to be super down and out. For those of you that would want to enter some of these stocks, I would recommend that you sort this list by what's called the Scooter, SCTR. This is a technically driven rating system, and it's really going to put you in front of the stronger stocks at this point in time. But again, you can hover over the ticker name and it will provide you with a thumbnail shot. But let's go ahead and click on to Anglo Gold Ashanti. This is a stock that certainly has been super strong. I would argue that and you can see that the stock is in fact overbought because of the condition. The RSI is up above that 70 level, and that's with an eye for the index or the stock eventually having a bit of a reversal because it is in that overbought, but this stock is super strong. We are going to take a look at other names that are in gold, but I wanted to provide you with a bit of background as to why some of these gold stocks may be rallying. Certainly there is a theory as far as gold stocks being a safe haven space, but that theory is not quite as relevant in the current markets. We have not seen that. Rather, I would argue that there is a seasonality factor. This is another strong Kirkland. KL is the ticker symbol. We're looking at a daily price chart. And what I did want to point out is on the daily, I will put a 10-day simple moving average. That's this green line. And we can see that this particular stock, KL, is finding support at an upward trending 10-day simple moving average, quite bullish. Your RSI has crossed up above this 50. It is trending positively, but take a look here. This is overbought, again with an eye for this, and it does appear to be pausing a bit, digesting this significant move from 19 up to 25. So down here we have the MACD. This is another momentum indicator. We want this black line to cross up through the red, that's your positive signal, and then also to cross up above this 0, that's indicating another positive facet to the MACD. So we do have all cylinders going for this particular stock, but again, circling back to that seasonality thinking with some of these gold stocks, these stocks historically do really well January into February. This is GFI, not quite as bullish here because it's still under this downward trending 200-day simple moving average. We would need to see a break back above that. Once it breaks up above that, it is only a $3 stock. I do tend to traffic in larger $5 is my limit. But once it does break back above that 200-day, it should be positive. But back to the seasonality, these gold stocks are very driven by the fact that the Chinese New Year does occur in January, and the Chinese historically gift gold to each other, and that is really super bullish for these gold stocks. They do tend to rally. The names that I just showed you, AUY. Let's go ahead. In fact, I can show you some. These are stocks that historically have had the most in the way of relevance as far as rallying in when these gold, when the price of gold gets hiked due to this increased buying pressure from the Chinese population. There are stocks that tend to mimic and track it a bit more. This is AUY, McGonagle, but this particular stock is still in a downtrend. We can see these, we're on a daily price chart. Each bar is 1 day of trading activity. We can see these simple moving averages are still trending downward. We are potentially flattening here. What I would need to see to turn constructive on this stock is that 10-day simple moving average trend up above the 50, the stock price breaking back up above the 50, and then up above that 200-day simple moving average. But we can see the RSI is beginning to trend into positive territory. MACD had that positive signal crossover, poised to break into positive territory as well. So we could be a little bit closer than anticipated, certainly with this particular gold stock. But again, pointing out to you how you can, from that materials and from that sub-sector industry group listing, get into some of these stocks and take a look. Now, the other way that we can potentially buffet and counterbalance the downtrend in the broader markets is to go ahead and take a look. I'm going to share with you some of these inverse funds. These are funds that are going to trade inversely to the index that you would choose to potentially trade against. So one of the first ones that we can take a look at is, ticker symbol is SH, and this is the inverse to the S&P 500. And really what I wanted to point out to you is just how volatile these inverse funds can be. And in fact, this is indicative of the volatility that we are seeing in the broader markets. So for those of you that would consider utilizing these inverse funds, just know that they are certainly obviously going to be just as volatile as the broader markets, but quite simply, they are going to be providing you with inverse capabilities. So we can see that the S&P is down a bit from its low close, its open. But let's take a look at one other index that we can do the inverse of, and that, of course, is going to be the NASDAQ. And SDS is an inverse there. And really what I want to point out to you is long term, how much can you anticipate potential protection, if you will, from a down market? This is SDS, is 2 times bear on the S&P, actually. I'm not showing you quite yet the NASDAQ. But what I did again want to do is go ahead historically. You're going to want to have a sense for the relevance and the helpfulness, for lack of a better word. So we're looking at a weekly. This is the double bear inverse for the S&P 500. And going back to other periods when we had corrections in the broader market. So this is that 2016 correction in the beginning of that year. This is the inverse 2 times on the S&P 500. So you had about a 5-week period where this served you well. Now this was rather a flash crash. It was rather fast moving. So let's go ahead and take a look at the correction that occurred here in the earlier part of this year, in late January into February. And again, we can see, as far as the relevance and the helpfulness, there was about a 2-month period where it did serve you well, but did it really? I mean, honestly, it did go up. This is 2 times bear, but the relevance over a longer period, it does seem to fade a bit. So I did want to point that out for those of you thinking of and contemplating using some of these inverse funds as a way to buffer your current holdings. Now let's go back to that view, because what I also wanted to do, I talked to you earlier about the concept of trading this volatility, if you will, and this is going to be really for super traders that do a lot in the way of intraday trading, where you are not shaken off by the potential volatility that is occurring in the broader markets. So what we are going to be looking for here, this is that market summary page that we utilize to go ahead and get into and look at gold stocks. I'm going to go ahead and drill down. Quite simply, I'm looking for areas of the market that are seeing a little bit in the way of money flows. So we've already talked about gold, the seasonality. There is another area that is picking up a bit today, and that is the semiconductors. So again, quite simply, I'm looking down at the various industry groupings and I can see green. The semiconductor SOX index is up a little under 1%. So we can then go ahead and click onto the name of that sub-industry grouping, and it does provide you with a view of that semiconductor index. But ideally, I'm going to go ahead back. What I would like to do is take a look at the underlying stocks within the semiconductor index, and really a better way, because I'm looking for candidates for those stocks that may be experiencing an intraday potential uptrend. And so this is the type of practice that you could do certainly at the open. There are other ways that I'll show you how to go ahead and get in front of this. But here we are with I went into the sector listing, into technology. Now we're looking at the sub-industry groups within technology. I'm going to now click on to the name of semiconductors, and here's where we're going to get a list of those stocks that are rallying today in the semiconductor space. And a lot of these stocks are really down and out. And you can see, I'm going to go ahead and place my cursor over the symbol, and you'll see a thumbnail sketch of the current chart. And you can see really this could be a bit of a dead cat bounce. A lot of these down and out, people are thinking they've gotten cheap enough. From my work, I would prefer to see a bit more in the way of strength. We're going to look at these stocks two different ways. So the first is that scooter. Here is your certainly one of your better names, XLNX. Xilinx has been a very top performer. We can quickly take a look. Here's another. Let's go ahead and take a look at Lattice Semiconductor, simply because it's not as Xilinx is a name I'm super familiar with, and it is quite constructive. But for those of you that are intraday traders and you are comfortable with the inherent volatility that is occurring in these markets, this is one way you can get in front of potential candidates. LSCC, we're looking at a daily price chart. So what I want to key in on here is the fact that this stock, and I've talked about this in those gold stocks that we were reviewing as far as what I would need to see to turn bullish. And this stock has done just that. It's broken back above not only this green 10-day simple moving average, it's broken back above this blue 200-day. And now the stock has broken above the 50. So by all accounts, the downtrend has been reversed. We want to marry that with a positive RSI. So the RSI has gone up above this dashed net neutral. And then take a look at the MACD. We had this positive signal crossover down here, the black line up through the red. That's going to put you on the prowl or on the lookout for an eventual move into positive territory above this zero. So we have actually four positive signals that are flashing that this downtrend has been reversed. The other one is when your shorter term key simple moving average crosses up through the longer term simple moving average. That's known as a golden cross. A lot of times it's helpful to look at these stocks historically. We can go back here and take a look when this very same synergy occurred, where the price broke back above these simple moving averages, your RSI was trending upward, and your MACD broke back up above this net neutral zero. And we can see the significant rally the stock had subsequent to that. Now, I will tell you this was during June, very different period in the broader markets. But certainly, again, for those of you that are shorter term in nature, this does appear to be bullish. What I'm going to do from here is go ahead and take a look at an intraday view of this very same chart and guide you as far as ways that you can take a stock such as LSCC using an intraday chart and really put some moving averages on there that are going to be quite helpful. So I'm going to pull a 1 hour chart up with this, and then quite simply down here, modify these moving averages so that they more are in line with what you want to see in an intraday chart. And so let me just go ahead and remove this simple moving average. So now I'm going to refresh the chart and really provide you with insights on utilizing this 1 hour chart to trade some of these stocks that are counter trading against the broader markets. So here we are with those very same metrics. They're going to be equally powerful on this 1 hour intraday chart. So I want to see the same dynamics with this RSI above this net dash neutral, your MACD also above, and it has been actually for quite some time, you can see. Now we did have a little bit of a struggle here, and this would certainly be a period when it breaks below these simple moving averages that you may want to visit other stocks. But here we are with today's action, and really only in that first hour. So we're not getting quite a bit in the way of historical reference for today's use. But again, this is that type of look that you want to see as the day progresses. So we can say, go back to this December very first trading day where the stock opened up similar to today. So you will want to see a continued advance as the stock remains above this shorter term 5 hour time frame. Your RSI remains in positive territory, and you want that to continue as the stock potentially advances. If you were to trade this intraday, you would not want to see this type of breakdown below these simple moving averages, as that would be negative. Now let's go back and take a look at other candidates within the semiconductor space. I talked about looking at stocks that are not as potentially constructive. This is going to be by using this scooter. We're back in the semiconductor sub listing, and these again are going to be your stronger names. But for those of you that are looking for potential turnaround candidates, you may be more inclined to take a look at a stock such as ADM, this AMD, Advanced Micro. This is a stock that was a big winner back here. What we're looking at here is a daily price chart. We can see AMD had quite a significant advance from May into this October correction. And it would be with an eye toward a potential reemergence of a former leader. But we are not getting that positive signal here. You can see that the stock price, the stock actually is currently down right now for the day. So I would need to refresh that list that we were referencing. But more importantly, for today's actions, the stock price is still below these key simple moving averages. So I would not be as interested in viewing the intraday on AMD. And we have time to take a look at one more stock here that could be of significance. And I talked about looking at your stronger names. This is XLNX. And this is another stock that does seem to be a bit trapped below its 10-day simple moving average. And we can look at that 1 hour chart. XLNX is Xilinx from the semiconductor space. We sorted it by scooter, your strongest. So here it's a little bit more interesting. It's breaking back above those shorter term simple moving averages that we put into play there. This is historically the type of move that you are going to want to key in on, where the stock breaks back above these simple moving averages, your RSI turns and trends positively in line with an upward trending MACD. So we're not quite there yet. The stock does look a little sleepy. It could emerge from here, but this is how you can play that volatility by utilizing those screens that I did talk about. And there was one other area, not sure if we're going to have time to get to it, that was turning positive going back. Unfortunately, we don't, but take a look at some of the financials. They are potentially having dead cat bounces as well. And for those of you that are trading actively this week, happy trading and take care.